So welcome to today's presentation. My name is Peter Yusuf, Senior Market Analyst at IronFX. In front of your screens, you have your USDs for our chart. All charts to be presented are to be of the same time frame unless otherwise stated. We're going to be mixing technicals with fundamentals. To tell you the truth, guys, I'm planning to focus primarily on the Aussie, USD JPY, and also have a look at gold. That seems to be aiming for a record high. And have also look at US stock markets. It's been a while, so it would be interesting to have a look how they're going. But once again, feel free to suggest any trading instrument you would like to see during the presentation. And even if we cannot make it, we can always make the presentation of it tomorrow. For the time being, Euro USD maintained a sideways motion between the 1.0795 and the 1.0890. I would be noting here that the RSI indicator tends to remain slightly above the reading of 50, but nothing convincing of any bullish tendencies right now. For the time being, we tend to maintain our bias for the sideways motion to continue. Now, should the bulls take over, we may see the price action rising, breaching the R1 1.0890 and start aiming for the 1.08982. While on the flip side, should the bears be in charge, we would require for bearish outlook the pair to breach the 1.0795 and start aiming for the 1.07. Note how that was able to reverse any downward pressure multiple times, so that's pretty valid, while the S1 is also pretty much valid given the continuous testing 1, 2, 3, 4, 5 touches practically. Okay, let's have a look at USD/JPY. Now, USD/JPY is of special interest. I'm highlighting it. It's practically at quite high levels, and at this point, allow me to drill into the daily chart to make it more visible. Note how the 151.90 was tested once, twice, and that's okay. It's not a record high, but it's practically back to the 4 chart. It's practically a 34-year high. I think the level has not seen such. Sorry, USD/JPY has not seen such levels since 1990. So that should be a bit worrying how weak JPY actually is. And at this point, I would expect practically the pair to maintain its sideways motion between the 150.80 and the S149.60. The RSI indicator remains slightly above the reading of 50, but it tends to lean more towards a rather uncertain market about the outlook of the pair. On a fundamental level, we all know that JPY has a safe haven status, but I think currently the main element which is affecting JPY's direction would be BOJ's monetary policy. Now, we had the release of Tokyo CPI rates. They were for February, and they accelerated substantially. They reached, if I'm correct, the core level at 2.5% year on year. Now, the release as such tended to highlight the persistence of inflationary pressures in the Japanese economy, actually in Tokyo's economy, but given the density of the population in Tokyo, we could say that it's indicative of the economy as a whole. So that was one issue, yet I would say that JPY bulls shrug off the news quite easily, quite fast. BOJ Governor Ueda made some statements during today's Asian session, yet he was focusing more on digital currency. And there wasn't any substantial comment about monetary policy and the outlook of BOJ. So overall, we tend to still see BOJ as maintaining a wait-and-see position. about inflationary pressures and whether it's going to be hiking rates in April or not, or even at a later stage. For the time being, the market seems to be expecting such a rate hike in April, even of 10 basis points, which sounds minimal. But for Japanese standards, it's an issue. It would be, in the minds of a number of traders, be signaling the start of a normalization of BOJ's ultra loose monetary policy. So that's the main element behind the rate hike as such, and it's not the width of the rate hike. At the same time, though, I would be noting here that even a rate hike, should a rate hike occur, in the April meeting, BOJ policymakers had stressed in the past that monetary policy, or if you prefer, financial conditions in the Japanese economy would remain rather loose. So it's a so-so situation right now. And in my opinion, USD-JPY is in a make or break position. Now, should there be indications about BOJ maintaining its ultra loose monetary policy further, I would expect JPY to weaken, and that would cause USD-JPY to rise, possibly breaching the 150.80. And I wouldn't be surprised to see the pair actually breaching also the 151.90, which is the record high level we have mentioned before. On the flip side, should the bears take over, I would expect the price action to breach the 149.60 and start aiming for the 147.75. Okay, let's have a look at cable. Now, cable, during yesterday's late European session, after we closed the presentation, if I'm correct, yep, in the American session actually, did test the 1.27 resistance line as was expected and corrected lower. And that would be serving as a confirmation of our outlook for a sideways motion between the 1.2615 and the 1.27. It's something which we had forecasted in yesterday's presentation. And the RSI indicator has corrected lower, yet remains still above the reading of 50. It's currently, let's have a look, at 59.5. So there is a residue of a bullish market sentiment still left. That's interesting. Should it intensify slightly, it could start pushing GBP USD higher. Yet for a bullish outlook, we would require the pair to breach 1.27 and start aiming for the 1.2775. Once again, for the time being, we tend to maintain our bias for the sideways motion to continue. Now, for the bears to take over, I would expect more or less for a bearish outlook that the pair has to breach below the S1, 1.2615. That was a level which was tested a number of times and is the low boundary of the current sideways motion. So I would require a lower true than this one. So the price action has to breach the S1 and start aiming for the S2, 1.2535, a level which provided support here and, in my opinion, also here. This was, in my opinion, a false break. Okay. Let's have a look at USD CAD. And USD CAD is quite interesting in the sense that, okay, we have a sideways motion here on a technical basis, that's clear. But I would like to remind our viewers here that BOC's interest rate decision is due out tomorrow. And the market may start positioning itself from today onwards, from the American session today. So don't be surprised to see some increased movement regarding USD CAD in today's American session. For the time being, though, we tend to maintain our bias for the sideways motion to continue just below the 1.36 resistance line. Note how the pair was once again testing the level. Yet at the same time, note how the Bollinger Bands have narrowed, highlighting practically low volatility for the pair. which could allow the sideways motion to be maintained. On the other hand, though, a small bullish warning here. It's the 1, 2, 3, 4th time, continuous time, that the pair's price action is actually testing the R1. There's a consistent bullishness, or at least a bullish effort to breach the R1. And the RSI indicator, despite edging just slightly lower, is still, I wouldn't say high, but it tends to reflect a rather bullish predisposition of the market for the pair. So should the bulls take over, or at least for a bullish outlook, we would require the pair to breach the 1.36 and start aiming for the 1.3695. For the time being, though, we tend to maintain our bias for the sideways motion to continue, at least as long as the price action remains within the boundaries set between the R1 and the S1. For a bearish outlook, it's going to be difficult for the bears to take over here. For bearish outlook, we would require the pair to drop, breach the S1 1.3450, and start aiming for the S2 1.3320. Now that's a very wide drop for USD CAD, and in my opinion, that would be difficult for the bears to achieve. So once again, our bias remains for the sideways motion to continue, yet we issue, given the chance that the pair has tested once again the R1, a bullish warning here. It could go upside. Let's have a look at the Aussie. Now, AUD USD dropped substantially during today's Asian session. And that was interesting practically on two reasons. The first reason, by the way, let's start with the technicals first, and allow me to correct the 0.6520, which used to be a support line, now has to be turned into a resistance line, given that the price action has moved to the downside. Let's go hunting for a new ultimate support line, unlocking the chart, going back, and we have a beautiful touch right here. Note this true, and that would be the 6270, sorry. Okay, locking it in, readjusting the chart. There you go. Okay, let's set the S3 at 0.6270. The S2 at 0.6350. The S1 at 0.6440. The R1 first resistance line used to be support line, now turned to resistance, is 0.6520. The R2 being set at 0.6575. And the R3 at 0.6650. Now let's talk direction here. Give me a sec. Locking everything in. The renewal of the downward motion of AUD USD tended to highlight any bearish tendencies of the pair and actually shift the downward trend line to the right. In my opinion, we are talking about a bearish predisposition of the market, and I wouldn't be surprised to see the pair retreating lower towards the 0.6440. At this point, should though Please note we have the RSI indicator, which is currently correcting a little bit higher, but remains pretty low. And we're talking about, let me have a look, the RSI being at 39.7. So there seems to be still some bearishness within the market sentiment left for the pair, despite the correction higher during today's European session. Note how the pair corrected higher after practically hitting on the lower Bollinger Band, forcing it to go up. Yet, as long as the downward trend line remains intact, that would imply that the pair has to correct once again lower and start aiming for the S1 0.6440. Nevertheless, for a bearish outlook, or to be more exact, for more certainty regarding a possible bearish outlook, I would require a lower chill than this one. So the price action has to breach the S1 0.6440, which would be paving the way for the S2 0.6350. However, that's more long term. On the flip side, should the pair stabilize once again around or just below the R1 0.6520, I would expect a clear break of the prementioned downward trend line. That would be a signal, in my opinion, that the bearish movement has been interrupted. While should the pair even breach the R1 0.6520 and also breach the R2 0.6575, we may be talking here about a possible bullish outlook. At this point, allow me to widen a little bit the R2. That's something that we missed. You can see how this peak formed a resistance line here, shifting the R2 to the upside at 0.6595. That's 20 pips higher. Now, on a fundamental level, we had the release of Australia's current account balance. That was for Q4. And actually, the release more or less tended to highlight how much wealth the Australian economy imported from the international payment system. It was characteristic that the current account balance got out of the negatives, got into a surplus, and it was a substantial surplus, which more or less was macroeconomically among the positives for the Australian economy. Yet, Aussie traders are turning their attentions increasingly towards Australia's GDP rate. It's for Q4. It's due out during the Asian session tomorrow. On a year-on-year level, the rate is expected to slow down substantially, while on a quarter-on-quarter level, the rate is expected to tick up and remain actually pretty low. It's if I'm correct, it's expected to reach 0.3% quarter-on-quarter. Now, I would see the year-on-year release actually overshadowing the quarter-on-quarter, as the slowdown is expected to be wide, and if actually so, or even wider, could weigh on the Aussie, intensifying any bearish sentiment of the market for AUD/USD. At the same time, though, I would be also noting that the Aussie is quite sensitive to the market sentiment in general, given that it's considered a riskier asset, given its commodity nature. So should more or less the market sentiment turn more cautious, I wouldn't be surprised to see AUD/USD dropping. And in that case, I think the bearish sentiment or the bearishness for the pair would become more obvious. Once again, for the time being, we tend to maintain on technical level a bias for the downward motion to continue, so we have a bearish outlook. For more certainty, though, I would expect the pair to reach or even breach the S1 0.6440. Let's have a look at gold. That was a rally, that is a rally which is still ongoing, and it's substantial, ladies and gentlemen. Note how the precious metals price breached yesterday the 2052 resistance line, now turned to support. Breached also the R1 2090 resistance line. By the way, this is the daily chart. So the R1 has to be turned into a support line. And currently is aiming for the 2135 resistance level, which is an all-time high for gold's price. The RSI indicator has breached the reading of 70 clearly. It's currently at 78, implying that the precious metal is possibly in overbought conditions, while also the price action has breached the upper Bollinger Band, also implying that the market may have gotten ahead of itself. At this point, I would be noting the, give me a sec, 2230 as the ultimate target for gold's bulls. Let's make the necessary corrections on the labels of the chart so we have a clearer picture here. There you go. So I think that for the time being, the bullish outlook for gold's price is clear. You can see how the upward movement was intensified. And for more detail, allow me to drill into the 4-hour chart. Once. There you go. Now the big question here is how sustainable this rally actually is. And you're getting in the 4-hour chart conflicting messages. On the one hand, we have practically the price action of the RSI indicator, which has surpassed the reading of 70 clearly. We're always in the 4-hour chart right now, at least. And that, on the one hand, highlights the strong bullish sentiment of the market for gold. That's more or less clear. On the flip side, though, the fact that the price action of the RSI has surpassed the reading of 70 tends to imply that gold's price is at overbought levels and may be ripe for a correction higher. Lower. On the other hand, though, the price action, you can see how the price action, or if you prefer, gold bulls were stopped whenever we saw the price action breaching the upper Bollinger Band. You saw that once, twice, 3 times. Right now, though, we have to note that the bulls have still some room to play until they hit the upper Bollinger Band once again. And I would be also noting that there seems to be some slight fatigue among gold bulls. As you can see, the first upward motion, okay, the first was tentative, that's clear. The second was very strong. The second was a little bit less strong. And then we have the third one, which is still there, but is less strong than the second. So we see that the advancement of the bulls becomes more and more difficult the more they near the 2136 resistance line, which is an all-time high for gold's price. Practically above the R1, it's uncharted waters for gold traders, gold bulls, and it would be interesting to see if it's being broken, when it's being broken, with which intensity it's being broken. All of that tend to matter. And in my opinion, most probably for the time being, we tend to maintain our bullish outlook, given that the upward trend line remains intact. Should the R1 be breached and the price action starts aiming for the 2180, we set that as the next possible target for the bulls of gold, given the volatility of the price action, the width of the rise in the past few days. I think that would be a very, very interesting phenomenon. It's going to be hitting the headlines, could attract more traders towards buying gold. We may see a bandwagon effect being built here. On the other hand, should the price action hit a ceiling once again at the 2136 and correct lower, possibly breaching the aforementioned upward trend line, implying some stabilization of the precious metals price, we may see bulls having second thoughts. Okay, let's have a look at WTI. Allow me to lock this in before leaving gold's chart. Okay. It's a very interesting chart in the sense that, for oil WTI at least, in the sense that we saw, let me drill to the daily chart. Back to the 4-hour chart. Let's reposition slightly the labels so we get a clearer picture. So, is there still a bullish outlook or not? In my opinion, yes, there is. It's a slight one, but it's still there. You can see how the price action was on the rise, stabilized, and that was over the period between the 14th of February up until the 25th, 24th of February. And we have still upward motion. The upward trend line seems to remain. And it's characteristic how the black gold's price actually bounced on it. That was during today's European session. I would be noting here, though, the fundamentals regarding the American market. It's going to be interesting to be reporting later today. And if there's practically another rise of US oil inventories, implying practically a slack in the US oil market. And that could be more or less narrower than the buildup, which was reported last week. It was at 8.4 million barrels, which was a substantial figure. But even should the rise of US oil inventories be lower than 8 million, say 6 or 5, it's still a rise in oil inventories, implying that once again, supply was able to surpass demand levels. So practically, the slack in the US oil market would be maintained, despite being narrower, but still there. And the big question, in my opinion, is not only AP, but whether there will be a confirmation by EIA about the slack in the US oil market also tomorrow. So I would expect that more or less, should the US oil data show that there is an actual slack in the US oil market, that could weigh on oil's price. And I wouldn't be giving up the bullish outlook as long as the upward trend line remains intact. Should that be breached, the upward trend line we have mentioned, which started on the 5th of February, then yes, we would be actually switching our bullish outlook in favor of a sideways movement initially. And should the price action fall below 75.65, which is the S2, and used to be the low boundary of the sideways motion here, then we may be talking about a bearish outlook, which would allow us practically to draw a downward trend line, showing us also any possible limitations of the downward movement. I think that technicals here play a key role, and we should keep a close eye over the release. By the way, mind you that some traders have started to note that possibly a head and shoulders formation has started to form in the 4-hour chart. It's something which I do not concur, but it's out there. It's an opinion which exists. And should that be the case, then we may see a $3, maybe $4 drop of WTI's price. Okay, let's have a look at your stock market, starting with Dow Jones. This is the daily chart. Please note that the daily chart remains in a sideways motion here. And it seems that it has leveled off at the 39,000 level, which currently is now below it. But in reality, what's happening here, allow me to drill into the 1-hour chart. What's happening here is that you have a very sideways motion running along, if you prefer, using the 39,000 as an axis. Allow me to correct the labels as well. So we tend to maintain our bias for the sideways motion to be maintained. I would be expecting fundamentals to lead Dow Jones here, and that applies for every stock market. For a bullish outlook, and that will most probably not happen overnight, but I would like to see the index actually starting to aim for the 40,000 resistance level, which, by the way, is a record high level, if I'm correct. Yep, it's already at record high levels. This is the weekly chart. Back to the 1-hour chart. We're adjusting it. There you go. On the other hand, for a bearish outlook, I would like to see the price action clearly actively aiming for the 38,000. Okay, let's have a look at S&P 500. This is the daily chart. Let's move to the 1-hour chart. The picture is different here. Way different. Back to the daily chart. Now here we have, look how strong this bullish movement has been. And that has been since the 24th of October 2023. You're talking here about November, December, January, and February, 4 months of continuous rise. Okay, there have been some corrections lower, but overall S&P 500 has not stopped rising since October, late October last year. It's going to be difficult to say that such a rise is sustainable, at least long term. And in my opinion, that's overpriced, but the price action is there. So despite the bulls having some hesitation yesterday and during today's European session, as long as the upward trend line remains intact, we tend to maintain our bias for the upward motion to continue. And given this, we're going to be correcting. Mind you that on Monday, the pair corrected lower after hitting new record highs, which is understandable. But nevertheless, the 5100 has been broken. Okay, let's have a new ultimate resistance line, definitely based on the movement of the past few days, actually weeks. And at this point, I would be noting the 5500, yeah. 5550, sorry. Let's correct the labels. $5,400 now being placed as the R2. 5,100, 5,250, sorry, being the R1. Next possible target for the bulls. 5,100 turns now into support line. The S2 is being set at 4,950. And the S3 at 4,800. The S4 comes out of the way, is no longer relevant. I think the most relevant line right now is that upward trend line. That's the main element which characterizes the price action. And to second note, I would be highlighting here that we have under our daily chart the RSI indicator, which tends to remain close but just below the reading of 70, which tends to imply that there's still a bullish sentiment in the market for the index. On the other hand, note how the 20, the 100, and the 200 moving averages are all pointing upwards. Okay, so more or less, once again, I'm highlighting here the upward trend line, sorry, the bullish outlook for the index. For a bearish outlook, or for a switch at least, I would require the price action of the index to drop, breach the 5,100, breach the pre-mentioned upward trend line. That could allow the index to stabilize between the 5,100 and the 4,950. For a bearish outlook, I would also require the index to breach the S2 4,950. So up until now, we're getting mixed signals. From the one side, Dow Jones remains in a sideways motion. The S&P 500, on the other hand, though, is in a clear bullish movement. Let's have a look at NASDAQ. Should be the last chart we'll see today. Similarly to S&P 500, I'm noting an upward motion. Could be shifted a little bit to the right, the upward trend line. The price action has breached the 18,000 resistance level, marking a new record high here. And I'm setting the next resistance level at 21,000. could be a little bit too high. $2,500. Okay, let's make the necessary corrections. The bullish outlook is there, and we tend to maintain it as long as the upward trend line remains intact. It's an upward trend line which, similarly to the S&P 500, has started on the last days of October. So here we have the two indexes coinciding regarding the movement and contradicting Dow Jones, which, due to the narrower base of the companies included, sends out a different picture. $18,800 at R1, R2 being set at 19,600, and the R3 at 20,500. Once again, the price action hit record high levels on Monday. It's going to be interesting to see whether that's going to be repeated during today's American session, given that we have also a downward motion during today's European session. That should sum it up. From all of us here at IronFX, best wishes for solid trading.
Everyone. Everyone, my name is Emily. We have previously discussed central banks and their role, but this time we will focus on the UK Central Bank. The Bank of England was founded as a private bank in 1694 to act as a banker to the government. In 1946, the government nationalized the Bank of England because of its importance to the UK economy, while in 1997 the government offered it independence in some areas to avoid interference and influence from party politics. The Bank of England is made up of 3 committees which make important policy decisions. We have the Monetary Policy Committee, the Financial Policy Committee, and the Prudential Regulation Committee. These are all chaired by the governor. They also include people from outside the Bank of England who have valuable knowledge or experience. They are called external committee members. The Monetary Policy Committee is made up of 9 members: the governor, the 3 deputy governors for monetary policy, financial stability, and markets and banking, a chief economist, and 4 external members appointed by the chancellor. The Monetary Policy Committee decides what monetary policy action to take and announces its policy decisions 8 times a year. The central bank uses 2 main monetary policy tools. It sets the interest rate that it charges banks to borrow money from them. This is the bank rate. It can also buy bonds to lower interest rates on savings and loans through the use of quantitative easing. Bank rate, also called the Bank of England base rate or just the interest rate, is the most important interest rate in the UK. The Monetary Policy Committee sets bank rate. One of the actions the monetary policy needs to take is to meet the target that the government sets for inflation, which is 2%. The current bank rate is 1.75%. Higher interest rates usually mean a stronger currency. The pound tends to strengthen whenever the Bank of England raises interest rates. However, the Bank of England's current task, like that of other major central banks around the world, is quite challenging as it needs to manage surging inflation and keep the economy from falling into recession. That's all for today, guys. Thank you so much for joining us. Stay tuned for next week. Bye-bye.
Okay, let's go ahead and get started. Okay, so I'm Melanie and I will be your speaker for today's webinar. So for today's session, we're talking about the second part of our Build Your Trading Strategy series. So today we're going to be focusing on day trading. Okay. Yeah, if you guys have any questions throughout the webinar, feel free to let me know in the chat. Yeah, I think that's about it. So before we get started, as per usual, a risk warning. So our products are traded on margin and carry a high level of risk, and it's possible to lose all your capital. These products may not be suitable for everyone, and you should ensure that you understand the risks involved. So a disclaimer, the information in this webinar should not be considered investment advice or an investment recommendation, but instead educational material only. This material is just the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein, and redistribution of the material is strictly prohibited. So as per usual, I'm Melanie and I'm your speaker for today. I'm an investment analyst from Everest Fortune Group, who were finalists for Best FX and Equity Research in the years 2019 to 2021. Okay, so here's our agenda for today. So I'm just going to show you guys what are the key news events to look out for or how you can implement them into your strategy. So this is based off of last week's news events, but I will show you guys this week's news events as well. I'm just going to use last week's as an example. Then we'll reference higher time frames, see which time frame you should use for day trading, identify momentum, taking the trade, and we'll go through a couple of basic day trading techniques. Okay, so let me know in the chat how many of you guys like to use or like to day trade. And yeah, let's just go ahead and get started. So this was last week's events. Okay, maybe I'll just make my camera smaller. Okay. So this was last week's events. You can see we like to use forexfactory.com. So let me just pull out this week's events. So this just shows you the medium to high impact news events. This is just how we like to use an economic calendar by comparing the actual and forecasted data to determine the outlook of the news release. So if you take a look at my screen now, right, when you go into forexfactory.com, it will give you guys, I mean, it kind of looks like this. So it'll give you all of the different impacts events as well as today's events. But let's say if I'm looking at this week's events, so 23rd to 27th, you can see I have all of the events, and I like to click this filter. So as I mentioned earlier, we like to just look at the medium and high impact events. But if you are particularly looking at a specific currency or different event types, you can go ahead and adjust those as well. Okay, and then you can take a look and see all of the different events that will take place this week. So it's quite a busy week this week with a lot of events taking place. Yeah, a lot of PMI releases. Okay, so let's just get back to our slides. So it's important to use an economic calendar when you day trade, because day trading in particular, it will affect your trades. Whenever a news release is out, you could see it go up or down. So it's important to take note of your fundamentals when you are day trading. Okay, next, let's move on. So now we are referencing the higher time frame. So what we mean by this, okay, let me just pull out my charts to show you guys. Okay, so let's say if I'm looking at the Aussie dollar, okay, and I'm looking at it on the 4-hour time frame. Okay, so let's say if I want to analyze this on the 4-hour time frame, I will go in with all of my trend lines, all of my the Fibonacci, so on and so forth. But I will also want to reference the higher time frames, such as the 1 day as well as the 1 week. Okay, so there's actually the reason for this is so that you can see what the general trend is. Okay, even on the higher time frames, because sometimes it does differ from between the time frames. So it's important to take a note of the different time frames, especially the higher time frames. And there is a strategy. I don't know, can't remember right now who it's by, but it's like a factor of 4 or 6 or multiple of 4 or 6. In this case, since we are referencing higher time frames, the rule is that you will go up either by a multiple of 4 or by a multiple of 6. So 4 times 6 would be 24 hours. So then we will look at the daily time frame. And then the daily time frame times 6 is 6 days, but we don't have 6 days on TradingView. Closest will be 1 week. So that's why we look at the 1 week time frame. Okay, that's basically how it works. If you're looking at a smaller time frame, so for day trading, normally we look at higher time frames. But if you want to look at the lower time frames as well, it's the same concept. Instead of a multiple, you look at a factor of 4 or 6. Okay, I can't really remember who started this strategy, but it's quite a popular one to go by. Okay, so that's what we mean. So which time frame should you use for day trading? So before we get into that, okay, day trading, normally we use either the 1 hour, 4-hour daily time frames, depending on your preference, and also depending on which time frame gives you a clearer market structure. So this is an example of a clear market structure. Okay. This is excuse me, this is an example of an unclear market structure. Okay, you can see the markets are really choppy, and you can't really see the shape of the chart very clearly. Okay, so obviously, if you are looking at which time frame is the most important, if we're looking at the same chart, okay, this is on the M15, and you can see that it's really unclear. Okay, and this is on the 1 hour view, which is clear. Okay, so what I'm trying to highlight here is that it really depends on which time frame gives you the clearest shape or chart. Okay, and this is really important for so when you look for swing highs, swing lows, this is really important for your support and resistance levels. which obviously is important for your entry, your stop loss, and take profit levels, but it's also important for your analysis. So your Fibonacci trend lines would have to follow the shape of your chart. So the clearer it is, the more effective your Fibonacci will be. There's also graphical tools. So like you saw over here, I have a really nice descending trend line with a very clear market structure. Okay, and this is also part of graphical analysis. So it shows you the trend really clearly as well. So at the very basics, the clearer the swing low or swing high, and the clearer the trend between these 2 points, the more accurate your analysis will be. So apart from having your own preference on which time frames you like to use as a day trader, it's also important to take note of which time frame gives you the clearest market structure. Okay, so far, are there any questions? Okay, if all good, let's move on. Okay, so here's just a brief intro into multiple time frame analysis, since we are briefly talking a bit about time frames. So the multi-time frame analysis. Okay, thanks, Ben. So the multi-time frame analysis is a trading strategy that involves analyzing the market from multiple time frames, like I mentioned earlier. So this, as a beginner trader or even as an expert trader, it basically helps you to get a better understanding of the market and make more informed trading decisions. So the first step in this strategy is to select the timeframes to analyze. So typically traders will choose at least 2 timeframes. So there'll be a short-term time frame, so 15 minutes, and a longer time frame, which will be either 1 hour or daily. Okay, so the short-term time frame is used to identify the most recent trends and price movements, while the longer-term time frame is used to identify the overall trend and market direction. Okay, so I briefly went through all of these earlier when I showed you guys the chart. Okay, but yeah, so once the timeframes are selected, you can then analyze the markets from each time frame. Look for key support and resistance levels, the different trends, as well as patterns. So for example, if the short-term trend is bullish and the longer-term trend is also bullish, this could indicate a strong uptrend in the market. Okay, so as a trader, you can use this information to make more informed trading decisions. So if the short-term trend is bearish, on the other hand, because in this case we're talking about bullish. So on the other hand, of course, if your short-term trend is bearish, longer-term trend is also bearish, of course, you can probably expect it to be a strong downtrend in the market. Okay, but if let's say the short-term trend is bullish and the long-term trend is bearish, then you can make use of your different indicators and graphical analysis tools to help you to forecast where markets are headed. So it's a little bit more complicated for those. Okay, so overall, multi-time frame analysis can help you as a trader gain a better understanding of the market and make more informed decisions by looking at the bigger picture and analyzing trends and patterns from the different time frames. Okay, so what should you look out for on higher time frames? Firstly, we have the key graphical levels. So these, we're talking about support, resistance levels. Next, we are talking about trend lines, trend channels, which obviously give you an idea of the trend. Next, breakouts. So by breakouts, we're talking about either breaking out the trend line, breaking out of trend channels, or different key graphical levels. Big moving averages. So if you make use of the 50, 100, 200 golden cross or death cross levels, the indicators, and Ichimoku chart as well, So we can use the Ichimoku cloud to give us an idea of where prices are headed towards. So if price is moving below the Ichimoku cloud, it is a bearish signal. If price is moving above the Ichimoku cloud, then it's a bullish signal. Okay. Okay, so next we have big Fibonacci levels like retracements, extensions, and projections. And lastly, we have price action. So what we mean by price action is basically looking at past, present, future momentums from the previous bar to dictate your strategy. Okay, so let's take a look at how we can identify momentum. Okay, okay. So firstly, let's look at the different momentum indicators. So the first one we're going to be talking about is the MACD, or moving average convergence divergence indicator. So I personally really like to use this indicator because at one glance it tells you exactly what the signals are. Okay, so it's if you want to know the calculation behind it, it's basically works by calculating by subtracting the 26 period exponential moving average, or EMA, from the 12 period EMA. So the signal line is a 9 period EMA of the MACD line. So MACD is best used for daily periods where the traditional settings of 26, 12, and 9 days is the norm. MACD triggers technical signals when the MACD line crosses above the sell line, the signal line, which would then signal that you can go for a buy, or falls below it, which is a signal for sell. Okay, so this uses three exponential moving averages to identify price movements. Difference between these averages is shown in a histogram. I'll show you guys in a little bit. And the movement can show whether a trend is strengthening or weakening. However, moving averages always lag behind price action, and they are more suitable for identifying entry points. So here is the points that I was talking about earlier. You can see the MACD line is the blue line, signal line is the orange line, and histogram is the red and green areas. And of course, the zero line is just over here. Okay. So the selling signal occurs when the MACD crosses over the signal line, or if you can see over here, it's also when our histogram is red. Okay, and yeah, so this is one of the trading strategies. So over here we have a buy entry. Okay, we're showing you the different buy entries that you can identify from the MACD. So you see price, or rather the signal line crossing over, and you also see this MACD histogram being green. So it's a huge bullish signal. And then once it crosses over again, it is a bullish signal here again. Crosses over, bullish signal, crosses over, bullish signal. You guys kind of get it. Okay, so every time there is a crossover, you can expect a change in trend. Okay, so if we look at the sell entry, same concept. Okay, it's just that when the signal line crosses over, then you see this red area. Similarly over here and here as well. Yeah, you guys kind of get it. Okay, but as I mentioned earlier, it is a lagging indicator like you see over here. So over here it says it's pretty green, and it doesn't cross over until after this drop. Okay. So just be careful or just be aware of that if you are intending to use this. Okay. Next, let's move on to a couple more momentum indicators. So I also personally like to use these two. Okay. RSI, let's start with that. So how it works is it oscillates between 0 and 100, with values above 70 considered overbought, values below 30 considered oversold. When the RSI value is above 70, it suggests that the security may be overvalued due for a price correction, potentially indicating a sell signal. When the RSI value is below 30, it suggests that the security may be undervalued and due for price rebound, potentially indicating a buy signal. Okay, I guess I'll show you guys an example. Okay, there's an example in the next slide. Okay, so stochastic oscillator readings more than 80 indicate that price is near its high. Readings below 20 indicate that prices are near the lows. A security is overbought when the percentage K line moves below above 80 and is oversold when the K line moves below 20. So this is an example here. In this case, we like to use hidden support and resistance levels. So for both of these indicators, in this example, we use stochastic, but you can also use this method for RSI as well. So for this method, you see that on our stochastic or RSI indicator, we have a hidden resistance level. Basically, all of the peaks are at the same level here. But you can see that on our price chart, price is making a higher high. Over here as well, a higher high. Okay, so what this basically means is that we can expect price to drop immediately after this, which is exactly what happened here. So once you identify these and once you identify price making a higher high on the second peak, whereas on our stochastic or RSI, it's giving us the same peak or the same level, then you can expect price to immediately drop after that. Similarly for over here. And in this example, we're also using stochastic, but here we are using a hidden support level. So you can see we have this really nice support level on our stochastic. But you can see on our price chart, price is near lower low. And over here, we have an ascending trend line. Whereas, of course, over here, we don't. So this suggests that we can expect price to continue to drop or continue to rise from the buy entry, or rather from our ascending trend line to the take profit. Okay, and you can see that's exactly what happened here. Okay. Okay, so if we look at bearish divergence on the other hand, here we have price, is this? Okay, so you see a descending, it's quite subtle, but you can see price is making lower highs on our RSI, whereas on our price chart, it's making, it's still a resistance level. Okay, so price is testing a key horizontal resistance level, with price making a smaller high, resulting in bearish divergence with RSI. So bearish divergence, basically when it's RSI or stochastic, you see price making a descending trend line, whereas on our price chart, it's kind of staying at the same level. That's basically what bearish divergence means. Okay, so our descending resistance line on RSI caught the past two reversals correctly over here. So you see there's two drops here. So we can expect that the third one, we would be seeing another reversal over here. Okay. Next, yeah, so this is just the example from here. You can see that price reverses strongly because of the horizontal resistance here, as well as the RSI resistance and bearish divergence. Okay, another example here. But this one is just on a smaller scale. So you can see that even if the difference in price is pretty small, it can also work. So for stochastic, it's giving us a lower high, and on the price chart, it's making a higher high. Okay, so yeah, so we can expect price to continue to drop. Okay. So you see the repeated pattern here, bearish divergence here and here. You see price drop here immediately after that. Okay, so it rises, and we see this price making a higher high once again, but on our stochastic, it's making a lower high. So we can expect price to continue to drop, or rather not continue to drop, but you can expect price to reverse from this point. Okay, and that's exactly what I did here. Hey, so divergence potential. So over here, we see price making a higher high, and on our RSI, price is making a lower high. So same thing, this is another example of a bearish divergence. First point, we want to always take note of where the bearish divergence started, as this is the level where it would tend to reverse to. Bearish divergence means price is making higher highs, RSI is making lower highs. Okay, so we can expect price to drop down here. And because this is a so if you were here for the support and resistance webinars, you would know that this is called a overlap support. Basically, it's just when price respects the bulls and bears of this level here. So we basically have swing highs and swing lows that are touching the same level. That's just what an overlap level is. So then you can expect price to come back down and reverse off of it again, or react off of it. So you see here, it's a overlap support because we have swing highs and swing lows. You can see price did reverse off of it. Okay. Forecasting breakouts. So we have this ascending trend line on our price chart, but we also have this ascending trend line on our RSI. But at this point, at this first column, RSI broke out of the ascending support line before price did. So this forecast that price might actually break out of it after this level here, which is exactly what happened here. Price broke. This is basically a predictor that price is likely to break out of this ascending trend line. Okay. So here as well, in this case, we have an ascending trend line or descending trend line, but we are expecting price to break out of it and head upwards. So price is moving downwards here. This is actually not a valid trend line because you guys will know that a valid trend line requires 3 significant touches, whereas here we only have 2. But on our RSI, we do have 3, and that's why we're pointing it out. Okay, so we have 3 points making a valid trend line, and RSI is breaking out of this descending trend line. Okay, so from here, price is breaking out of it, so we're expecting it to continue to rise. We're expecting this price to continue to rise and break out of this ascending trend line. Now we see over here that there is also bullish divergence. Bullish divergence is basically the opposite of bearish divergence. So on our price chart, price is making a lower low, and on our RSI, it's making a higher low. Okay, so first point, price is now testing the descending resistance line, which is basically a descending trend line, and we're wondering if it will break out of it. But we see RSI descending line breakout over here right before this. And number 3, the recent bullish divergence further suggests that we could be seeing a strong reversal or breakout of this descending trend line. Okay. So we have a successful breakout of the descending resistance line as forecasted by our RSI. Okay, any questions? Okay, that's great. Let's continue. So lastly, is this our last part? Okay, I'm not sure if this is our last part. But okay, next we are taking the trade. So firstly, if we look at the different news events, so bringing us back to our first point where I mentioned that when you're day trading, it's really important to look at your fundamentals and take a look at your economic calendars. So in this example, we are using the US unemployment claims, which occur 12:30 p.m. GMT every Thursday. We also have the central bank interest rate decisions. Okay, so in this example, on the 15th of June, we had the unemployment claims, which was over here. You can see Thursday, 15th June at 12 o'clock, we can see this drop over here. Okay, because of the unemployment claims data. Okay, and this is on our DXY. So we see this drop. If we recap, go back to what we talked about for the MACD, you can see price crossover here, right? The signal line and the MACD line, price crossed over. And then we also see this red histogram, the red area. So very bullish signals, and you see price drop at that timing. But if we look at gold, you see here XAU USD, this is gold. And you can see that on the other hand, on the same day, at the same time, gold actually shot up. Okay, you can see if we're looking at our MACD, price signal line cross over the MACD line. Okay, and also it's giving us a green histogram area. So very bullish signals, and you see price shoot up at the same time. Okay, so this is just because gold tends to be negatively correlated to the DXY. Tends to be, not always, but yeah. So that's why it's important to keep up with your fundamentals and take a look at these as well. So if maybe I'll just sidetrack a little bit and show you guys this correlation table from my FX book. Okay, so you can type in, so I think normally we use 80%. So if it's on negative 80. So currencies with correlation lower than 80% and higher than 80%. Okay, we're day trading, so I'll just use 1 day. Okay, I can't remember if it's 80 or 70%. If you guys know, let me know in the comments, in the chat. But yeah, so it highlights those that are really strongly negatively correlated or positively correlated so that you can check them on your charts. So if you can see one that is really strongly, maybe like this 90%, the Euro AUD as well as the AUD franc are pretty strongly negatively correlated. So you can expect when price goes up on one, the other will go down. Okay, yeah, it's just a bit of a sidetrack for you guys to take note. Or if you guys are curious. Okay, let's get back to our slides. Okay, so another example here is the FOMC meetings. So just now, I think I mentioned we're talking about central bank minutes. So central bank minutes for FOMC meetings often come with your interest rate increases, interest rate hikes, or even if they stay the same, those tend to be released during FOMC meetings. So you can see on the 14th of June at 6 p.m., at that time, you can see MACD line and signal line crossing over each other and giving us a bullish signal. You can see price also shot up. Okay. Oh, yes, this is the DXY. So because I mentioned earlier that they tend to be negatively correlated, you can expect price to drop down for our gold at the same time. Okay. And you can see here that it is a little bit laggy because the drop really happened a little bit earlier, but our MACD was only able to catch it a bit later. So just take note of that if you intend to use the MACD. But otherwise, you can see that it's pretty useful in helping you to catch any changes in trends, which tend to be quite frequent because the market is pretty volatile during news releases and during events, which is why it's important to keep up with your fundamentals or look at your economic calendar. Okay. Again, another example, 12th of October, we have the unemployment claims. Once again, can see price shoot up at 12:30 p.m. for our DXY. So you can probably expect it to drop as well on our Euro US for our gold. But in this case, we are talking about Euro USD, and price is dropping as well. Okay. Basic day trading techniques. Okay, so we kind of went through a few of these already. Okay, but yeah, we'll just talk about them a little bit. So basic day trading techniques, we have the first one, which is following the trend. So anyone who follows the trend will buy when prices are rising or short sell when they drop, which is normally what we recommend, to just follow the trend. And that's why it's important to look at the different time frames as well. But this is done on the assumption that prices that have been rising or falling steadily will continue to do so. Contrarian investing. This strategy assumes a rise in prices will reverse and drop. The contrarian buys during a fall or short sells during a rise with the express expectation that the trend will change. So you can see why we typically recommend the first technique. Okay, trading the news. We also highly recommend trading the news because investors using this strategy will buy when good news is announced or short sell when there's bad news. And this is really closely linked to investor sentiment as well, which of course can affect the market's volatility as well, but can also lead to higher profits or higher losses. Okay, that's all for our slides, but we still have a little bit of time. So let me know in the chat if there are any charts that you guys would like me to go through. I think we maybe have time for one or two. Maybe we will just take a look at gold first. Okay, and then if you guys have any requests, just let me know in the chat. Okay, so if I'm day trading on the 4-hour time frame, right, I would look at the 1 hour time frame maybe. I mentioned earlier the higher time frames I would look at would be the 4-hour and daily time frames, okay? Because factor of 4, factor of 6, multiple, sorry. Okay, so let's take a look at our daily time frame. Okay, on our daily time frame, we have this multiple swing high here. Okay, we also have this ascending trend line. And you can see prices are pretty bullish over here on our daily time frame. Now on our 4-hour time frame, you can also see prices are really bullish. Okay, but there is a resistance level here. Okay, that price is currently testing. Now our 1-hour time frame. So this is where I'm gonna go in and do our analysis. Okay, so I'm just gonna place my first support here. Second support here. First resistance. Second resistance here. Okay, second support here. So these are just purely graphical. And then now I'll go in with some Fibonacci levels to support my graphical levels. Okay, and I can see my 22.6 lines up with my second support. Okay. Okay, I'm looking for a retracement. So for retracement, we use these 5 levels. Okay, and I can see my 50% lines up with my first resistance. Okay, my 78.6 also lines up with my second resistance. Okay. Okay, my second resistance is a pretty significant level. Okay, you can see I can pull it all the way back. Okay, I'm just going to highlight this area here. Okay. Okay, now I'm going to go in with some indicators. So I like to use Ichimoku and MACD because at first glance it tells you exactly what the signals are. So MACD you can, or rather Ichimoku, you can see price moving below the cloud. Okay, let me see if I can zoom it in. Yeah. So you can see price moving below the cloud, and on our MACD, you can kind of see price moving below, or rather price crossing over already as well. Okay, so overall bearish for both of these signals. So I can go in for a sell from my first resistance to my first support. But I'm gonna go in just to double check. I'm gonna go in with another indicator as well. Okay. So it's really important to have a bunch of indicators that you're really comfortable using because there are so many indicators out there. So a bunch will tell you that it's bearish, and then the other half will tell you that it's bullish. So as long as you know how to use a few indicators, and then you just test them whenever you are done with your analysis, your graphical and your Fibonacci analysis, that would be enough. Okay, so I can see my RSI, I have a descending trend line as well. So very bearish over here. So I'm going in for sell from my first resistance to my first support. Okay. Okay, we have a request for US oil. So I'll just go ahead and do that now. Okay. Let's see on the 4-hour or 1-hour time frame, which of these gives us a clearer graph, clearer chart. Yeah, I think the 4-hour gives us a clearer chart. Yeah, let's go ahead and do that. So starting with our weekly time frame. Okay, trend is pretty bullish. Okay, except for this reversal here. Daily also, is this a trend line? Okay, no trend line, but also pretty bullish. Okay, in just the trend, but just if we just look at the trend alone. Okay, but here is pretty bearish. Okay, let's see if we have any trend lines. Okay, we do. We have this ascending trend line. Okay, but it's currently testing this trend line. So we'll go ahead and take a look at that in a bit. This is my first support. And my second support, maybe this. Yeah. Yeah. Okay, and then my first resistance. And my second resistance just here. Okay, now let's go in with our Fibonacci levels again. Okay, I have this 61.8 that lines up with my second resistance. And my 61.8 also lines up nicely. Then I'm looking for another retracement, and I can see my 60. Okay, my 50% lines up with my first resistance. And here, my 61.8 also lines up with my second resistance. Okay, now let's go ahead and look at some indicators. So same thing. Price is moving below the Ichimoku cloud, so it's giving us a bearish signal. MACD is also giving us a bearish signal. Let's see RSI. Okay, RSI isn't really telling us much. Let's look at stochastic. Okay, stochastic, you guys can see this hidden resistance that we talked about earlier. Okay, and we see that price has made a lower low here. Okay, so this means that we can continue to expect price to continue to drop. Okay. Okay, maybe we can look at another indicator. We see price crossing over each other. Okay, price is moving below the EMA and SMA, so it's a bearish signal. I thought we could see a trend difference if there is a crossover, but the trend difference has already occurred. Okay, so overall, all of our signals are pretty bearish despite this ascending trend line. Okay, so we can expect it to continue to drop or to break out of this ascending trend line. I'll remove that so it's not so messy. To drop and continue to drop towards our second support. Okay, but I want to mention that we might see price reacting off of this level at our first support because we have a confluence area here with the swing lows and also with the 61.8 and the 100% Fibonacci projections. Okay, so we might see price reacting off of our first support. But overall, there's still a lot of downward pressure. So we can probably expect it to break out the first support and head towards our second support. Okay, and that's it. Yeah, let me know if you guys have any questions. If not, that's all the time we have for today. Thank you guys so much and have a great rest of your week. And I'll see you guys next week. Bye everyone. Bye, Yuria. Thanks for coming. See you next week.